There are 3,157 homes scheduled to be auctioned this week. That's up 23% on the same week last year. New South Wales will hold about 1,200 auctions, with roughly 1,000 of them in Sydney. Victoria will hold about 1,500 auctions, with virtually all of them in Melbourne. Queensland will hold about 260 auctions, with about 160 in Brisbane. South Australia will hold about 150 auctions, with most of them in Adelaide. Western Australia, the NT and Tasmania will hold 10 auctions between them, and the ACT will hold 94 auctions. Take a look at the most viewed properties going to auction this weekend, and in New South Wales, it's a two-bedroom apartment, number 553 Redmond Road, DY. Price guide for this is $495,000. In Victoria, the top home is 69 Dennis Street, Northcote. This charming three-bedroom cottage has a price guide of about $1.1 million. In Queensland, the top home is 8 Minyama Island, Minyama. This giant five-bedder has a 12-metre pontoon and a jetty and, yes, lots of bathrooms. In South Australia, the top property is 11 Albert Street, Semaphore. This home has been badly damaged by fire and is being sold in its current condition. And in Western Australia, the top property is 6 Bank End, Duncraig. This four-bedder sits on a near 800 square metre block of land. And the most viewed property on the REA Group website this week is 20 Kirribilli Road, New Gisborne in Victoria. This huge property is about 1 hour's drive northwest of Melbourne. Northwest. It's positioned on 18 acres, offering panoramic views of the Macedon Ranges. The home resembles an African safari lodge. It's got a massive open living areas, high ceilings, exposed brick, a large staircase, huge fireplace, 4 bedrooms and 3 bathrooms. Outside, there's a pool, a gazebo, there's a pool house, a 70-metre flying fox, and parking for at least 12 cars. There's also 3 paddocks, 2 dams, a powered stable, a shelter, a tack room and a feed room. Price guide for this one is $5.2 to $5.6 million. And for more on property, I caught up with Angus Moore from REA Group just a little bit earlier.
Yeah, that's right, Ed. We're kind of getting into the year now. Auction activity is really starting to pick up and picking up more than what we saw last year. The number of scheduled auctions this weekend is up about 23% compared to what we were seeing this time last year. So that's a reflection of both this year being pretty busy. We had a lot of properties coming onto the market in January in Sydney and Melbourne, so we're starting to see those being auctioned. But also the fact that last year was pretty quiet. We're coming off back of interest rate increases. It was a pretty quiet time in property markets.
Clearance rates, how are they holding up right now?
Yeah, it's been pretty solid start to the year. We're seeing in Sydney and Melbourne sort of mid to high 60s, which is better than what we were seeing towards the end of last year. So, conditions are remaining pretty firm, despite the fact that we are starting to see a bit of volume too. So, things are looking relatively positive so far this year.
And are there a lot of properties selling before auction as well?
Yeah, we kind of haven't seen a huge amount of that thus far, simply because there just hasn't been that many auctions yet. But we are seeing properties sell a little bit quicker than was the case last year in some markets. Particularly in places like Adelaide and Perth, where we're seeing really quite quick sales times at the moment compared to what's been true historically. That's because those markets remain really, really competitive. There's just not a lot of stock available for sale, and so when it does become available, it's selling very quickly.
Now, I know the Easter public holiday is a little bit earlier this year, so what does that mean for property sales over the next month or so?
Yeah, I think it means we'll start to see activity ramp even further from here. We normally do, but I think we'll probably see even perhaps a bit more of a ramp than we normally would because people will be trying to get in before Easter. Things tend to quiet off after the Easter long weekend in a typical year. The fact it's so early this year, may mean we see some activity spill a little bit later into autumn than is normally the case, but one to watch.
Now, I know flatmates.com.au is part of the REA Group. Just talk us through how busy it's been the past couple of months for the rental market.
Yeah, rental markets are obviously very, very challenging at the moment. And what we're seeing in terms of flatmates is that that's making a lot of demand for share accommodation. So the number of people looking for a room to rent on flatmates was the highest we've ever seen in January. Now, January is normally a busy month. It is when the rental market turns over, people moving for work, for uni, etc. So, we expect it to be a busy month, but it was even busier than we normally see, and biggest on record.
So a lot of people looking for places, or a lot of people listing spare bedrooms and things like that as well? Or?
So it's both. We saw the most ever looking, but we also saw a big increase in the number of people listing rooms, looking for housemates. It was up, nearly 20% compared to what we were seeing this time last year. So just a lot of people looking for share accommodation at the moment, which when you consider how tight rental markets are, kind of makes sense, that people are starting to look for ways to defray the cost of renting because it is so expensive to rent now.
Yeah, I was going to say, is a lot of this being driven by the high cost of living now we've got in Australia? People potentially may have lived by themselves, looking to move in with other people.
I think that's certainly part of the story here, and it's a big reversal from what we saw during the pandemic. One of the big trends across the pandemic was rents actually fell in Melbourne and Sydney and fell quite a lot in Melbourne. And that meant we saw a lot of share houses break up into smaller renter households, which drove a lot of demand for rental properties and is part of why rental markets are so tight. I think we're starting to see that reverse. The fact that rents have surged, particularly in Melbourne in the past year, Sydney as well, it's pushing people back into larger households and looking for that share accommodation.
Now, this week, some big wage numbers came out from the Bureau of Statistics, 4.2% increase in 2023, a little bit more than what the Reserve Bank was thinking, but do you think it's going to change their mind at all around where interest rates are going?
Yeah, I think probably not. It was a little stronger than they'd forecast. Their forecast was for 4.1% over the year.
Yeah.
It's not a huge difference, so a bit stronger, but probably not view shifting. But I do think, it's probably pushing the RBA towards being maybe a little more hawkish than perhaps some are forecasting. Markets are expecting or have priced in cuts later in the year. I think the RBA is maybe a little more hawkish than that. I think they haven't, while inflation is coming under control, it's not there yet. And the fact that we're still seeing strong wage numbers, is going to flow through to things like market services inflation, which is a persistent thing. It's remaining higher than goods inflation. So I think the RBA will still be kind of watching that as a potentially needing to stay higher for longer.
Okay, well, I know their next meeting is towards the end of March because we're on that new cycle. But Anchor Sport, thanks so much for coming on the show.
Pleasure. Thank you for having me, Ed.